Welcome, everybody, ladies and gentlemen. Greetings from a rather cold and wet London. Um, we have a terrific array of capital markets firepower from Latin America assembled here with us. We've got, well, so far we have three sovereigns. We're still waiting for one more to join, and one multilateral. We've got a couple of portfolio managers. We have a leading capital markets and sovereign advisory attorney and a leading debt capital markets banker. So I'll just take really quickly who they all are. From Brazil, we have Luis Fernando Alves, who is the head of the middle office in Tesouro. From CAF, joining us from Bogota, we have Manuel Valdez, who is the head of international bond issuance. From Chile, we have Victor Gonzalez, head of public debt, the public debt office in Chile. Paula Espinosa is joining us from Mexico, where she's recently promoted to MD of Financial Operations. We have Nick Eisinger joining us, the only other person in London, I think, joining us from Vanguard. And the attorney I referred to is Greg Harrington from Arnold and Porter, where he's partner and head of sovereign finance. And he's in Washington, I think. And joining us from New York is Gordon Kingsley, who's head of Latin American DCM origination for Crédit Agricole. And Crédit Agricole and Arnold and Porter have very kindly sponsored this little meeting. So thank you very much again to them. So, oh, Herman, you're here. Great. So now we have four sovereigns. Herman Camille is joining us from Montevideo, where he's director of the Public Debt Office. So, unusually breaking the habits of 1,000 panels, I'm actually going to start by asking I was going to say the investors, but we have only one investor at the moment. But so I'm going to start with you, Nick. And now the background to the first couple of months in Latin American bond markets, or sovereign SSA bond markets anyway. I mean, records being broken right and left, biggest trades, tightest spreads, currency debuts. Several of the borrowers, issuers here, and all the issuers here have issued this year, as most of you will know, some more than once. And as I say, many records have been broken. So there seems to be an unending appetite for Latin American sovereign and MGB paper, but which is fantastic. But why is it so fantastic is what I want to ask first, Nick, and then Simon if he joins us, and then hear from the others on the panel, because it won't have escaped anybody's attention that there are quite a few sort of headwinds, as people like to call them, international controversies of one sort or another, wars and rumors of wars and trade wars and goodness knows what else. And we'll no doubt talk some more about some of those during the course of the next couple of hours. But Nick,
Sure.
why this great appetite given what's going on in the world?
Well, there's a price for everything, is the simplest way to put it. There's lots of risks in the world around the new administration in the United States, who has pretty quickly shown some of their initial colors. And I say initial colors, that's probably a topic we'll come back to a little bit during the course of this debate, because initial and eventual colors, I suspect, will be rather different. So I'd say there's a price for some of the risks were beginning to be priced in towards the back end of the year, coming into early 2025. And then remember, normally January and February is typically a very busy time for issuance. Usually starts with the better quality names, the IG names, and we saw that closer to my geography with Poland and a raft of others. And obviously Mexico came in with a very, very large deal. I think they did a good job on that. They prepared the market well for it. Mexico obviously had, Mexican assets at least had seen quite a lot of risk premium added back into them, partly in light of the elections in Mexico itself in the summer, as well as the new administration, or at least the election of the victory, should I say, of Trump in November. So we came into the new year, certainly ourselves, and I suspect other investors who will always have to own some Mexico. It's a big part of our benchmark, Obviously, we like to beat the benchmarks, but we came into it with limited Mexican exposure. We liked the risk premium in the market at that time, and all credit to Hacienda, they gave the market what I thought was quite a nice risk premium, or new issue premium, if you want to call it that, on those new issues.
All right, good.
So that's usually how you would expect the beginning, the top of the year to
Yeah,
start.
it is, and obviously Mexico has a long record of being the first one out of the gate. I think last year it was actually on the 2nd of January, maybe, or the 3rd.
Right.
But anyway, but this isn't a year like any other, is it? Let me ask our, well, I'll come to the issues in a second, but let me ask our two American market professionals, because they're both sitting in America and are Americans. Um, Simon hasn't joined us yet, has he? And I just can't see him. Say something, Simon, if you're there. No, we'll assume he isn't. So, Greg, I mean, you've been in this market for a very long time. You've done countless very successful bond issues. You've worked on them. Brazil's inaugural sustainable, Colombia's first social, even building bridges in Panama. We won't ask about who owns the bridges these days. But what do you think, from your sort of bird's eye view, is driving this appetite? Because without question, it's been an amazing, whatever it is, 6, 7 weeks.
I think I'd leave that mostly to the investors and to the bankers on the line and to the issuers. But certainly, I think the difference between bonds and equity right now. I think there is a rush. I think in some instances to see what's going to happen in the United States, whether Trump is going to continue supporting things like the Inflation Reduction Act and others. But I think it's I think it's just a sign of, as Nick said, it's the beginning of the year that drives a lot of activities as sovereigns are looking to bring in resources for their upcoming budget. But I think it's a confluence of factors. I think it's where equities are, where debt is, the expectation of whether the U.S. central bank is what it's going to do with interest rates going forward. So I think there's a number of different factors.
I mean, there are now the first murmurings about the Fed hiking this year. I don't know if people, I mean, that's actually the last question on this list of questions, but it's obviously in everybody's mind. Gordon, what do you want to add? I mean, do you think we're going to talk a little bit more about some of the specific policies of Mr. Trump's administration, but you keep seeing things saying his bark is worse than his bite, which is kind of what Nick said. This thing about the multilateral development banks, the executive order a couple of weeks ago, doesn't affect either of the multilaterals here. But, is it really conceivable the US is going to pull out of the World Bank? I don't know. What would you like to add?
No, look, I would just echo what others are saying. I think, we have a couple of convergence of a couple of factors. I think, first and foremost, there's abundant liquidity, and that finds its way into a lot of the funds, Nick's and others. We see still fixed income attractive relative to equities. That's partly because we think equities are overvalued. I mean, the forward multiples on equities are so high now that makes it fixed income an attractive alternative. We still have persistently high interest rates, and that has meant, and I'll let Nick confirm this, but from an investor point of view, there are still reasonable coupons to be had for our region. And if we look at a lot of these names on the sovereign level, but drilling down to corporates and FIs, these are largely investment grade names that are coming wide to investment grade levels in the US and Europe. So there's still value there. And I think that's what has driven things. What I would note is with these persistently high interest rates, it means that the relative amount of credit spread that investors are getting paid has shrunk compared to the high coupon. So they're getting a nice coupon, but I think what this has meant for us as we've been advising issuers is spreads are at or close to historic tights. So that's attractive from an issuer point of view if you're looking on a spread basis, not necessarily on a coupon basis. So again, I think that kind of convergence of factors has meant that this liquidity has driven a lot of it into fixed income, a lot of that into these top names, and they're all represented by this panel. in emerging markets, and I think we'll see more of that.
Okay, good. Paula, your inaugural question. Welcome to your first OncFIF panel. Of course, one of the records that I referred to earlier on was most definitely broken by UMS, as you not only did you issue $8.5 billion worth of bonds, the biggest issuance ever by UMS, but you had $33 billion of demand. So when I asked you to pick your favorite transaction of the year so far, I guess it's probably that one. But tell us what was good for you in your brand new job about this terrific issue?
Well, it was amazing. I think that we had 3 maturities. It was 5-year, 12-year, and 30-year bond. And we had this historical demand of 33 billion, and it represented 3.9 times of our subscription. So basically, I can tell that by far in this year is our best rate so far. And I think strategically, we did this in early of the year to lead Latin America international debt issuance and to size investors' strong appetite for new assets. Our transaction attracted nearly 400 individual accounts. That was also really high.
What was the geographical spread of the accounts, Paula?
We had actually, well, mainly it was in United States, but we also have European and Asian investors.
Many official, sorry to interrupt, but were there a lot of official sector investors, central banks, sovereign wealth funds, people like that?
We have mainly funds. They were really interested. Were the main demand, but we have a lot of different sectors. I think it was a huge transaction for us, and we also had this ability to increase our investor base. That's also, we're really happy about it. We have some new investors, so that's also good for us.
So when you were roadshowing and talking to investors, did everybody ask you about tariffs? I must ask you this.
Actually, we did something really with the timing, actually, because I think it was in the beginning of the year when tariffs weren't that of an impact. Actually, for the euro transaction, we actually had to do it really quickly because we wanted to not do it after the volatility, when the tariffs that the United States gave. So we actually did this earlier to have less volatility than it was at the beginning of February.
Sure.
We tried to.
Okay, good. Luis, let me turn to you. You, of course, have actually been in the market this very week. You've just done a 10-year first deal of the year. How did it go? What sort of questions were you getting from investors? What were they preoccupied about in terms of Brazil? Luis is still here.
Well, yes, can you hear me?
I hear you. I can't see you, but that's right. Oh, no, I see you now. Yep.
I cannot say so much about the last issuance yet because we are in a period that we cannot talk in detail some information, but we consider we had a good reception for the new bonds. We had a spread that is low in comparison to the issuance that we did last year, for instance. In fact, in Brazil, in December, in domestic market, we had some turbulence in the market, but the market improved since then. And the market recognized that what we had here in domestic market was perhaps an overshooting, nothing new, but now we are observing a better scenario here domestically, and of course the domestic scenario is important for the issuance of Brazil, even abroad. But this year we see large issues like Mexico, for instance. The global market become more stable, especially as concerns over the Trump's trade policies. Is it on a broader level? In fact, the tariff situation remains like a key factor, of course, but there is now, in our view, a perception that Trump will take a more pragmatic approach. Of course, he made a strong, yes.
Can I just ask you, typically, of course, Brazil, I mean, you haven't issued an international bond for 6-7 months or something, but typically Brazil always says that it doesn't go into international bond markets, doesn't look for external funding for budgetary reasons, but for benchmarking reasons. I understand the use of proceeds of this new issue is to repay existing debt. But is that still the case, that you view this as a benchmarking exercise? And a subsidiary question for that, you mentioned spreads. Several people have mentioned spreads already. Petrobras is barely trading outside the sovereign. So are you overpaying, or is Petrobras underpaying? Quickly.
Yeah. No, our strategy is qualitative. Our focus is to build good benchmarks. So in this sense, we don't have financial needs in the external market. We try to issue in moments when the yields are okay, that we don't have pressures on the yields. Of course, we have at this moment a lower spread, but we have at the end not so low yield for the bonds, because the interest rates are high on the. But we don't consider that we have overpaid in these bonds. We don't consider that. Our focus is to create a good benchmark and also to keep good liquidity in our yield curve. So it's a kind of maintenance of the yield curve. So depending on the moment, the yield will be higher, but this is part of the strategy to make regular issuances in these markets.
Okay, thank you. I'll turn to the other issues in a second, but Nick, just let me ask you, what's this spread compression? Is that something you're observing between, corporate and FIG versus sovereign?
Some, yes. I mean, when you talk about corporates in emerging markets generically, we like to think of that as, we think about it in a couple of levels. One is that you should normally want to get some degree of spread to the sovereign, if only because you typically give up a bit of liquidity if you're buying a corporate bond relative to a more benchmark sovereign bond. Of course, you may be trading that liquidity off against potentially a better credit, right? So certainly they're going to be, you look at Argentina, for example, where there's some of the corporate names that maybe not now, given what the president has been doing in the past 12 months, but certainly that typically have been better pure credit quality, if you like, than the sovereign. So we think about that as a trade-off, yes.
You include YPF in that, for example, because of course they did a large deal last month.
Right. Yeah. Yes. But I mean, the more generic remarks about the market is, I would agree with the comments that there's not a lot of spread cushion available. That means that you want to be very selective about where you position yourself as an investor on curves, where the best carry and the roll down is, maybe where you're getting convexity in some parts at the long end of the curve. We quite like at the moment playing for carry, which usually is a strategy where you have a little bit of a shorter dated position, because our view in terms of overall spread compression for the MB as a whole, if you like, the credit market as a whole for this year is somewhat muted. Perhaps it'll tighten a little bit, a few basis points, a few tens of basis points here and there. But obviously there are opportunities in carry. And obviously the index itself, one of our colleagues just talked about the all-in yield, and that really matters. And someone might say, well, you get that in IG, you get that in US high yield. Yes, you do, but you don't get the duration exposure in US high yield. So the beauty about EM is you're getting this nice all-in yield in some places with a nice spread on top of it, and in some cases, even better, a good credit story, but you're also getting a lot of duration. And that's really the way that I think people are positioning themselves in certainly sovereign credit markets.
Yeah. Because talking about duration, I just, or maturities, long dated paper, DR has just issued a 30-year.
Yes.
Yes.
Which
we won't ask if you bought it.
One of our most successful trades to date.
Oh, well done. They also issued in
the complex, I mean, but yes.
Yeah, they also issued in an international Dominican peso bond, and we're going to talk about that topic a bit later on. But goodness, we have got a lot of panelists, haven't we? So it takes a long time before we get round to everyone. But Victor, 1.6 is obviously a number that you like because you've done $1.6 billion and 1.6 billion euros back to back. That's quite a lot to get done from Chile's point of view straight away in the year, so early in the year. Will there even be another international issuance from you this year? I mean, tell us what people were asking you about when you were out selling these two issues, but also give us a little bit of a look forward to what you might do for the rest of the year.
Well, after the COVID situation, I would say that in the Chilean case, and it's the similar case for many countries, the external exposition was a little bit higher than before. So we have to be cautious about the portion that we try to do in the external market, and not because the capacity of the external market, but because of the external exposition that we want to have. But in our case, we announced a plan that contemplates a little bit higher amount of external debt. So it's very likely that during the mid part of the year or during the second part of the year, we could be issuing a little bit more. Regarding the topics that in the case of Brazil already mentioned, St. Gordon, I would say what's different regarding the pre-COVID situation is a world with a higher debt burden, persistently high rates. So in our case, at least, the higher duration is not the best case for us. The spread is good, but we can take advantage of the spread in the value of the curve, for example, as was the case during January. I don't say that in the future there will be no scope for longer duration. There could be and always will be, but we have to be cautious about because the war of super low rates, I think it's over.
And might you come again in euros? Is euro now a kind of core issuance currency from your point of view?
It's very likely, not only because of the rates. We have a certain preference because of the carry that it's implied in the low coupon rates in the case of the euro, but also we have certain preference, as many know, about the SLB, ESG in general topics. So we are working regarding certain modifications, for example, in the SLB framework that could be enforced during the second part of the year, and obviously we think that the reception in the euro market could be better in comparison with the US market. And obviously we have to think about Trump's situation.
Yeah, we're going to unpack a little bit the sort of ESG story, and Greg in particular has just written an excellent paper on the subject. But it seems that pretty much everything you issue is going to be thematic from now on, one way or another. Sustainability link, no?
Not all. We have established an internal target, and we have published and shared with the investor community a target to maintain at least between 40 and 50% of the total stock. But in our case, and especially in the case of the sovereign, more important than the instrument themselves, it's more important the general story, the storytelling that we care about the ESG topics, that we are doing things in order to decarbonize the economy. And sometimes this is as important as the securities project. So.
Okay, thanks, Victor. Herman, the last of our four sovereigns, you've also issued this year, $1.2 billion a couple of weeks ago. How did you find market conditions at the opening of this year, given everything we know about the US government and so on, compared to earlier years? Because you've been in this job for quite a long time, so you've got plenty of comparisons to look at. How was it this year, or this month?
Thank you, Chris. Well, more challenging and tricky. We had 3 go no goes that were actually no goes before on Thursday pulling the trigger. So it really market timing was of the essence given the market backdrop. So there was a lot of uncertainty when it came to the timing of primary issuances. And just maybe to highlight, because we were able, as you said, to issue $1.5 billion with 100 basis points spread, the lowest ever credit spread for Uruguay on a benchmark bond. And I guess that there's some factors I would like to highlight on that outcome. The first one, obviously, is sovereign credit worthiness is always a factor. But I want to emphasize 2 others that I think we realized were important too. The second one is scarcity value. The total supply of bonds in dollars in that part of the curve vis-a-vis the liquidity demand that had also a bearing on the outcome. And also the importance of crossover investors driving the deal, and not only real money or hedge funds. That was also very important, aside from the timing of the execution and the importance of syndicates in execution. And finally, I want to highlight one point that we've been discussing a lot with underwriter banks that have been part of our deals of the last few deals, and is primary issuance are key, obviously, in the amount you can fund yourself, the coupon you fix, the type of investors you attract to the deal. Yet, however, it's also very important to promote the functioning of secondary external bond markets, because you go to global markets once, twice, or even 3 times a year, but markets vote every single day, and they're putting a price on your secondary markets. So the way they function then has a bearing on the day you want to go and fund yourself. So the government has continued to encourage market-making activities and transparent provision of market quotes by all underwriting banks. And we are creating incentives for financial intermediaries to enhance the liquidity of our bond curves. And this is very important for a country like Uruguay, which structure is a small country with typically lower liquidity in its bonds. So I just wanted to highlight also the point of the functioning of secondary external bond markets, because in the end, Chris, that's what puts the reference rate over which you build your indicative pricing and you issue premiums.
Absolutely. And will you publish or make public the sort of your kind of liquidity league table as to who's being motivated by the incentives, or is that for internal purposes only?
No, it's only for internal purposes. And one of the things we are also trying to do is have a standardized set of indicators across underwriting banks on how much they participate on our bond markets, the type of liquidity, whether they provide quotes in all Q in Bloomberg. There are many technical factors that are not as glamorous, but they are as important in trading of our bonds and eventually on secondary market prices.
And you did several new things last year, didn't you? Didn't you do your first linker?
Actually, our first SLB was back in 2022, but I would say 2024 was a transformative year for us, because it was the first time we were able to issue in 4 different currencies in international markets. Yeah. We issued in nominal pesos and in CPI index units. That was in May. Then we issued in dollars, and then we issued in Japanese yen. Yeah. And that's a financial flexibility that actually helped us a lot last year. On the other hand, it's more challenging, Chris, because you have different investor bases to cater, and communication there becomes key.
Before I turn to the others, Paulo, because I know you've got to leave us, before the hour's up. One thing stuck out in the short bio you very kindly sent me, that you were developing strategies to diversify the investor base, okay, but also, and this is what Herman's remark about quantifying liquidity and activity of dealer banks. The other thing that you have in your portfolio is implementing quantitative models to strengthen debt management decisions. So is part of that doing the kind of liquidity monitoring exercise that Herman is doing for Uruguay?
Yes, we constantly have this monitoring of the markets. We have these models that we have to see spreads and to see opportunities in different markets. It could be in yenes, in euros, in dollars. We have different models for that, and we have these models that we have implemented to see opportunities in spread, technical measures also in FX. And we also see for the expanding the investor base, we do this continuous calls and events for us to be part of different events in different countries. So basically, I can tell you that right now our models are pretty sharp. We have had really nice outcomes, and we will continue developing them. And even though we have had 2 really successful transactions in January, and we do have some space left in the debt ceiling of external debt, we are planning to issue a little bit more in the sustainable side to do a maintenance in the curve. And we will use these models to see in which currency will be the best option for us, and also to see the windows of opportunity.
Have you considered at all, I'm sure bankers ask you about it, tell you about it, following the examples of Victor and Herman and doing an SLB? They are the trailblazers, not only in the region, but the world. Might we see one from UMS?
No, from our side, we will still be with use of proceeds. Actually, investors haven't demanded us that kind of issuance. So we're pretty comfortable right now with the we don't plan to do it in the near future.
Okay, good. Thank you, Paula. I'm going to turn to our 2 multilateral development banks now. And in alphabetical order, I'm going to start with CABE. I mean, but both your institutions have been record breakers this year, each done your biggest ever issues. Also, CABE, you debuted in sterling. So some people may know, Thomas, you're still with us there, aren't you? Yes, you are. Some people may know that I spent a couple of years trying to get the UK to join CABE, and also you listed on London for the first time during that period, and now you've issued in the British currency. So how did you find that? Was it as easy as you'd hoped? What were the difficulties? What questions did people ask you?
Thank you, Chris. Actually, yes, you have a very good point. We were looking at this market since a couple of years ago, especially last year, as we noticed the good performance of the basis swap. Going from a sterling pounds to back to US dollars was very attractive, and we didn't do anything last year for many reasons, but one of those is because we had such a good transactions in other markets. I can mention, for instance, the dollar benchmark at the beginning of the year. Then we have the largest ever transaction in Mexico. We did up to 10 billion Mexican pesos. Even that we have been in Mexico for 20 years, we never reached that amount. We did that with the first transaction in the first half of the year, and then a retap in 2 tranches, short and long term. And then we have a couple of transactions in Costa Rica as well. That was a strong sign of the commitment of the bank with its member countries. And some other private placement with good cost of funds. So at the end of the year, we had no more room for other transaction, fortunately. But so the idea was to find a window as soon as we do the US dollar early in the year. And that's what we did. We did the US dollar, as you notice, 1.5 billion. And then right after, a couple of weeks later, we announced the sterling pound transaction. And one of the reasons is in the same as other colleagues have mentioned, looking for expanding the investor base. That was a unique opportunity. That was the new currency for Cabay. So there are a lot of brownie points on these transactions. Also, the put Cabay, out there, the name of Cabay in the market, as you well mentioned, that Cabay has been talking to the UK since a couple of years ago, trying to see if there's a chance to join the bank.
Do you think we might see any ratings action on Cabay this year? I mean, obviously you have a long-standing ambition. Are you hopeful for 2025?
I mean, we have AA stable outlooks right now. We've been in discussion, as you know, with the rating agencies. They see Cabay very well positioned in terms of financial indicators, robust liquidity, capitalization. But yeah, we need more high qualifying members in the shareholders' equity.
Yeah.
So that's a very important strategy that we're looking at. Different highly rated countries. One of them is UK. The other ones might be other European countries or Asians that can, have a link with the region.
Yeah, of course. Manuel, you and Tomás, of course, represent two of the fortunate multilateral development banks that do not have the United States as a shareholder. So they can't pull out because they're not in. You also did your biggest issue this year, slightly bigger than Tomás's, $2 billion, I think. You've got a $13 billion order book.
14.2.
Wow. Okay. Well, there you go. It goes up every minute. And you've also done sterling this year, your second sterling trade, I think.
Indeed.
What were the standout points of this year's transactions so far? And how much of your external funding have you now completed?
Sure. No, I think maybe we could start with the US dollar trade. We had been looking at the US market since the first week. I think there was a total of 12 transactions from the supranationals coming out. And for us, it was important to issue before the 20th of January because obviously there could be some volatility afterwards. So that's why we issued the second week of January. And the outcome was superb. I mean, if we compare this trade that we did in January with the one that we did last year, which was the same tenor, we had over double the order book. In terms of US Treasuries, we were able to tighten the spreads. So last year, that trade, that was a 5-year as well, was almost 52 basis points above what we were able to achieve this year compared to US Treasury. So overall outcome, more than 200 investors. We had over 45 individual investors with tickets that were above 100 million. And geographical diversification was superb as well. We saw a lot of investors from Asia that we previously hadn't seen in the past.
Although you've got a long track record of attracting investors in those markets. I mean, you've done Aussie dollars, you've done yen and so forth as well.
Correct.
That's getting even better from what you're saying.
Yes, especially from the central bank and official institution community. From Asia. So yeah, we continue to improve, and we wanted to take advantage of that momentum that we had with the US dollar, and we came back to the sterling with our second trade. Our inaugural trade was last year, Last year we had an order book about 4.4, and that was the largest order book from a supranational in 2024 for the sterling market. This year, that's the second trade that we did. Was a smaller order book, but overall, we were trying to demonstrate to the sterling investors that we see the sterling market as a strategic market for us, and we want to be a regular issuer there. And the outcome was great as well. That trade was for 750. The inaugural one that we did was 1 billion.
Okay. Yes, I saw the 750 was this year. I mean, do you think it's made a difference to perceptions among sterling investors that, for example, the UK is now no longer part of the European Union, as everybody knows, but that's enabled it to join the Trans-Pacific trade. I can never remember what it is, but you know the thing I mean.
Yes.
Which obviously brings Latin America generally sort of more on the radar of people in the UK, I hope.
I mean, I think the success of issuers coming from Latin America is an element of diversification. But I think what had to occur, because when we started looking at the sterling market, and that was about, to be honest, about 6 years ago, and why we started looking at the sterling market is our coverage from the DCM banks went from New York completely to London. So we made all the coverage go to London. Why? Because those were the desks that had most of the supranationals and European supranationals. And so at that time,
you don't get to talk to Gordon anymore.
No, he sometimes visits us. I mean, obviously, we're always happy to see Gordon, but the coverage has gone to Europe.
And Crédit Agricole does now have an office in Bogota. I know because I visited it for its inaugural drinks party, Gordon. So, Gordon, long silence from everybody else. I'm sorry, this is my fault. We'll all try and be a bit snappier in our answers, and I too in my questions. So I accept the blame. What do you think of what you just heard? I mean, obviously you just heard a variety of different experiences from all of these issuers and the various deals they've done this year. What would you like to comment on what they've said?
No, I guess a couple of things, Chris. Look, I first of all, I have to congratulate every issuer attending here, because you guys have clearly taken advantage of great conditions, but that doesn't happen just because conditions are good. It represents years really of work, and we've had the pleasure of working with a number of all of you on transactions, and that's in plain vanilla format, in ESG format, and developing those investor bases and creating that diversification ahead of a transaction is critical. I would say that's a first point. So if Tomas or Manuel come to market and they have record books, it's not because investors woke up that morning and took a look at the credit. It's because of a lot of hard work. Same issue for all three of the sovereigns, I would say. I would make one kind of interesting observation. You know, this strong liquidity, which seems to be sort of, I don't know if it's a perfect market or a perfect balance between enough coupon for the investors, but reasonable enough spreads for the issuers, has stimulated a lot of activity. So I think issuers are comfortable that they're getting close to or record low spreads. Investors are still getting paid in an overall coupon. And as Nick points out, there's less of that cushion for the investors, so they have to be selective. But I think if they can be, that drives a kind of a great market. I would highlight one thing. I know Paula had to leave, but we've seen almost $16 billion of issuance out of Mexico in the first 5 weeks of the year. And we started off the year with the expectation of, and the reality of, a lot of volatility out of the US on trade, on sort of geopolitics. Mexico in particular was in the crosshairs of the new administration. And I think UMS very wisely went to market in both dollars and euros before anything happened. But I would point out that even after the Trump administration announced tariffs on Mexico and Canada, there was a sort of a Monday morning. The next day, by Tuesday, there was a large corporate deal printed out of Mexico, Savi Energia, double B name, over $1 billion. And the next day, BBVA Mexico did a tier 2 subordinated transaction. That was $1 billion. We were happy enough to be involved in that. Plenty of demand. corporates, FIs, sovereigns. The sovereigns issued 11 billion. So I think it's curious, but I think it's good news that even with the noise coming out of Washington, if you look at Mexico as a kind of a bellwether, there's been plenty of demand. And I think that, the question is, Nick raised the question, can spreads get much tighter? Maybe a little bit. I think our view is maybe a little bit if this treasury market stabilizes, but probably the risks as we go later into the year get a little bit asymmetric on spreads, that we could have a much bigger widening than tightening. So I would congratulate everyone for having taken advantage of this. I think we're going to see a lot more activity. Things are slowing down with blackouts in the next couple of weeks, but I think when March comes, with the sovereigns and supranationals having come, I think a lot of the banks and corporates will come when their year-end numbers are out. So I would expect March and April to be very busy as well.
Okay, thank you. Nick, I'm conscious of the fact that you've got to leave us before too long, so I'll bring you back in at this point and then turn to Greg. I know you're always I saw you on a panel in Vienna, as you remember, last month, and you're always a man who likes to kind of chuck a hand grenade into the conversation. So I'm going to invite you to do that now.
Very good.
Okay, Donald Trump, no single human being has been talked about more in the last year or so than Mr. Trump. We always hear about this transactional approach to his policy decisions. You see, you put the tariffs on Mexico and Canada, and whoops daisy, 24 hours later, they aren't there anymore because the Mexicans and the Canadians have done exactly what Mr. Trump wanted them to do. I know he now is in power, but is it that old question of campaigning in poetry and governing in prose? When it actually gets down to it, is there a cat in hell's chance that the US would pull out of the World Bank or the IDB, for example? He's saying these things to make a point, isn't he?
I think fundamentally that's correct. I sort of liken it to taking your parents-in-law out of the nursing home for a weekend, and they just moan about everything, but they're not really going to do much about it, right? And I think in some ways that's how the market has by and large traded this. Obviously, we saw with Mexico and Canada. I'd be a little bit cautious about drawing too many conclusions from that, because that would have led to a potentially very bad outcome for the United States itself for obvious reasons, the trade links, etc. So I think he got told probably fairly categorically around that was probably a no-go. Other tariffs, as you say, it's if he can achieve something on the other side. And indeed, what a lot of these countries have done, from Colombia right through to Mexico to other places, I think it's stuff they were doing anyhow. But obviously you want to create the sensation or the image that you're doing something about it, right? So I think there is a lot of bluster. But obviously markets, in credit markets, there's not a lot of cushion. If you do think he's just crying wolf, and if it proves that he's not crying wolf, and I think the broader sort of drip feed of this kind of way of negotiating is quite damaging, right? Because it's sort of a death by 1,000 cuts in some ways. So potentially there's something further down the line that could go fairly horribly wrong. The Ukraine stuff going on right now, we could have a whole panel entirely on that actually, but that's very interesting, right? So the bonds have sold off a lot, specifically Ukraine bonds. They were very euphoric about, say, a deal being done. I personally think there will be something done. And I think this is just the way that Trump negotiates. He throws all the things on the table that many other people are too diplomatic or too sensible, perhaps, to say, and something's going to happen. Yeah. But you need to manage a portfolio in such a way that you don't get over your skis for even, periods of a week or two, because this clearly can happen. You want to have a trading position. You want to be able to take advantage of things and factors when these kind of events do materialize.
And no, you mentioned Ukraine just really quickly. Nobody, I suspect, really thinks that the Ukrainians are going to mortgage everything that's under the soil of Ukraine for the next 100 years on the back of Mr. Trump asking nicely for them to do that. It's clearly just not going to happen, is it?
I think it's unlikely. Yes. Clearly he's trying to get, he's trying to get the Europeans. I mean, it looks as though he's pushing the Europeans away, but in some ways, he's actually, you could argue that the administration is trying to get the Europeans to up the ante a little bit.
Yeah.
Relative to what they've done over the past 3 years. So that's a very topical thing going on in the markets more generically. That has implications predominantly for Central and East Europe. Obviously, we're around LATAM today.
Yeah.
My only other observations really around LATAM, generically, Brazil, we did look at the new dollar issue this week. We're still pretty cautious on the local currency market there. We think that there's probably more pain to come. We think that there's still limited credibility. I think they'll get there eventually, and that'll turn out to be a very interesting trade, trading both local rates and probably the currency.
The BRL has strengthened, though, hasn't it? Quite considerably.
Yes, it has. BRL has strengthened a lot. So you would say there's probably not that much risk premium in the BRL right now. So it's more of a rates trade. And then if you want to make the analogy to Mexico, where, as I was suggesting, some of the risks were priced in, certainly in credit, what you do observe is you observe the MXN, so the peso has lagged, right? So the peso's lagged the copy, so the Colombian peso, it's definitely lagged the BRL, it's lagged a few other currencies in EM space. And I think that concept of a risk premium, what if the United States does something, is still sort of with us, and it's going to take a little bit of time for that to play out. Although, of course, you see Banxico, moving most recent to a 50 bips cut, now signaling that it's going to do another 50 basis point cut. So owning rates in Mexico, local rates, is also a trade that we quite like at the moment.
Okay, good. Thanks, Nick. Greg, I want to turn to you and sort of, there's a slight link to what we were just talking with Nick about, but I'd like to take a little bit of time and explain to us there's a temptation to think that the thematic bonds that all these issuers are committed to one way or another, social or SLBs or old-fashioned green bonds. There's a sensation that that's coming off the boil a little bit, and the temptation is to draw a direct link between that and obviously President Trump's clearly stated skepticism about those kinds of things, just generally. But I think you think, and I would agree, that there's more to it than that. And this is not just a kind of piece of Trumpiness that is taking the shine off thematic bonds. You thought a great deal about this. Just run us through what you see going on.
I will. Just going to step back for a second. I think I would be remiss as a U.S. securities lawyer not to point out, as all these tariffs and other sanctions and other moves that we've seen in the past few weeks, what that does to issuers and their disclosure, and how to address that very quickly in long closing periods, and for the disclosure teams that work so very hard to update the disclosure. I think there is an also, from a U.S. disclosure point of view, which is often the focus of U.S. securities lawyers, there is an aspect to this that I think has to be recognized. I think in terms of the pullback from ESG, at least in the US, I would say that I think President Trump, his election and his early moves are more a symptom in some ways than a cause. This has been coming in the United States for some time. There's been a growing backlash against ESG broadly writ in the United States, not necessarily sovereign-linked bond, sustainable-linked bonds or sustainable or green bonds or what have you. But generally, as an overall matter, ESG, whether it be environmental, social, or governance, there has been a growing pushback. And I think it was certainly before President Trump's election back in November, there had been movement over the years from states' attorneys general and others pushing back against Biden-era regulations, pushing forward to ESG. So you see that whether the listing standards, most notably in NASDAQ, but also to some extent the New York Stock Exchange, pushing back on that. Different states in the United States, which were adopting aspects to make boards more diverse. And I think Uruguay had a terrific bond trying to promote diversity in terms of market participation. But you find a significant pushback going back years. For example, the Biden administration, I think most notably, proposed relatively early on in the administration under Alison Harrington-Lee, and then also under actual Chair Gensler, a set of ESG disclosure requirements. And the minute it took them a long time to negotiate them quite carefully, how far to push. But the moment, I think the very day that they were announced by the SEC, a number of business groups, as well as environmental groups, began litigations against those. And so I think what we're going to see is, and so those were frozen. And that's an example of many different things. The question now with President Trump, I think, is, and his increased pressure on the Securities and Exchange Commission, which has always been an relatively independent agency. There's been increased pressure by President Trump on the SEC since he took office, including there's announced that DOJ has been going into the SEC now and looking at different things, limitations on new rules and what have you. The question is, what comes next for the SEC and what does that do? And will they, for example, and the SEC acts in different ways, right? It is not only a regulator, as we would say, reviewing registration statements and what have you, but it's also a civil enforcer. And to what extent will the SEC pick and choose what it's going to enforce? I think we saw notably the Trump administration announced in terms of the Foreign Corrupt Practices Act that it may, that's going to pause for 180 days enforcement while it does a review of the Foreign Corrupt Practices Act. So I think there is an overall pushback that President Trump is implementing in many ways. But again, it's a symptom of something that had been brewing in the United States for much larger.
And is the direction of travel clear to you? Will it continue in the same way? Will it pause? Will it reverse? Probably.
Well, there's an interesting. It'll be interesting to see, and I use the word interesting as maybe the wrong word to use, but it'll be interesting to see what happens with SEC rulemaking. One of the recent executive orders that Trump has come out with is called the 10-for-1 rule. Originally, in his past administration, it was the 2-for-1 rule. Now it's a 10-for-1 rule, where for any new rule proposed, the regulatory agency needs to cancel 10 existing rules. That's been challenged in the courts and what have you, but that shows the direction that they're going. Also, in a movement against, to some extent, SEC's independence, the Trump administration is also now requiring all new SEC rules, among other rules, to go to the White House for approval and review before they're issued by the regulatory agency. So, the question has been raised, for President Trump, quite famously, and has been discussed at length in this panel, came out and proposed sanctions on different countries and in different ways. To the extent that could be enforced through the SEC and registration statements has been raised. And the question is whether that's an independent agency subject to the International Emergency Economic Act, whether Trump can actually do that. So it'll be, to one side, fast-moving movements against SEC independence, but at the same time, this regulatory freeze through executive order. So I think it'll be, for those of us that watch the SEC and try to see and try and predict what it's going to do, it should be, at least intellectually, an interesting period of time.
Okay, that's interesting in the famous Chinese sense, perhaps. But
interesting times.
Herman, does any of what Greg has just said concern you? I mean, you really are all in on thematic ESG bonds. Are you worried about these developments, either the sort of regulatory SEC aspects or simply the general kind of shift in the culture, if I can put it that way? Your microphones are off, Herman.
We agree, thank you, and recognize that we've seen this change in vibes and trend towards almost like a backlash against ESG. In our case, we should be back in 2022. We retapped in 2023, and we have the deadline for the observation year actually in 2025. So we are focused on trying to meet the targets on both KPIs. Our focus now is that we've laid the foundations for our sustainable financing strategy, and there's a new administration taking office in 10 days. So we'll see what the policy priorities are for this new administration. Yet we have the foundation in place if they want to expand the strategy into other environmental targets and indicators, or move into social indicators, as for example Chile and Mexico have done. But in terms of the strategy for Uruguay, we continue to be focused on making strides not only on our environmental indicators and environmental progress, but also particularly, Chris, on the G part of ESG, on governance. It took a lot of governance to put together the bond. It wasn't only about the E part of ESG, naturally. The interministerial coordination, the institutional arrangements, the transparency and timeliness and frequency in the information you provide to the market, that goes way beyond the E component, right? I mean, in the end, transparency is the real hard currency of the bonds. So I think the ESG component goes well beyond, I think, what some back and forth or backlash on environmental issues. I think it's more fundamental to sovereign creditworthiness.
Okay, thank you, Victor. Am I right in the same question to you, but also I just wanted to ask you, am I right in thinking, you may have told me this, but are you planning to do a biodiversity themed?
Yeah.
bond? Tell us about that.
Regarding the first question, I would say that in case of Chile, on the contrary to other countries, the economic incentives are relatively aligned with the decarbonization and ESG topics in general. Just to give you two examples, one pillar of the decarbonization strategy in Chile is the non-conventional renewable energy on the greenification of the matrix. So we have a lot of improvement, or we have experimented a lot of improvement during the last years. Our participation of non-conventional renewable energies is huge in comparison with other countries. And most important, the price of the non-conventional renewable energies is lower in comparison with traditional energies, and it is expected that it will be reflected in the economy. Second one, we have a lot of new technologies, such as green hydrogen, which is still an uncertainty in terms of the development, but it's a sort of bet that the different governments are doing in terms of how we could diversify the sources of the economy. So in this regard, I would say that the effort is a similar story to Uruguay. We have the same objectives, and we have been developing the same objective during a lot of years, and it's quite difficult that we change that in the future.
And you did mention, already mentioned, in fact, the interest from Europe, as in the euro denominated,
exactly.
partly driven by this, yeah?
Actually, when we entered into the ESG market, we didn't rely on the US market. We were more reliant on the euro interest. So in this case, obviously, there will be an effect if the US is absolutely on the contrary side, but the effort will be the same. And most important, I think that we have to understand the ESG financial topics in general as a support. But most important than that is the general story of the country and the general efforts that the Chile is doing on that. So obviously, it will be more difficult without the support of the financial markets, but it's a long story that obviously not only dependent on the financial markets. Regarding the other topics, yes, we have a strong commitment, and it's not, I would say that it's not only a government commitment. On the contrary to US, the social commitment with GST topics is relatively high in comparison. It's demonstrated by different surveys. So it's very, very difficult that a specific government would say, okay, we want to change absolutely the course of the country. No, it would be very difficult. And because of that, we are working on that. In the case of the SLBs, as I already mentioned, the idea for this year is to expand a little bit, specifically related to the biodiversity topics. It is expected and has been during many years expected that this will be the years of the biodiversity issues. It hasn't been so, but the idea is that year to year there will be advanced improvements. So in the case of Chile, we are working on that. It's not very easy because in the case of the biodiversity topic and in general related to the scientifically driven measures, it's not so easy to capture all the diversity of the scientific issues in just a single KPI.
Yeah, I was going to say, how do you formulate KPIs for biodiversity? Because apart from anything else, obviously, biodiversity is something that has a pretty long time horizon.
Yes.
It's not
actually we have been working for 1.5 years, with the support of Pew, the NGO. The idea, and I don't want to get into details, but is to capture all the very different factors that affects the biodiversity protection into a single KPI through different layers. So there are different components for the KPI, but most important, all the components are reflected in a single KPI as a sort of checklist, okay, where we have check, and the KPI is achieved or not. So the idea is to capture that and to assure the protection also. So not adding a simple statement that, okay, we are protecting certain zones, because sometimes there is only a decree, but it's no actual protection. But also to include other topics, for example, that there is enough number of park rangers, there is camera trials, monitoring system, and other important issues that normally are related to the biodiversity topic. So yeah, we still think this as a retail or sort of retail bonds. We are not thinking about that as a super huge bond in which the U.S. market will be actively interested. So perhaps if we launch finally, the Euro market will be the focus. If there's no possibility to do a super huge size, no problem. The commitment is there. So that's the idea.
You mentioned retail, but I wanted to ask a question of all sovereigns actually about retail, because this OECD report came out quite recently that mentioned a couple of countries in the region. Colombia was certainly one. I can't remember if you were another, who were looking. I mean, it was a global survey of sovereigns and retail, retail govies generally. Colombia was definitely one of the Latin America ones said to be lining up an expansion of that. But are you also? What is your plan for attracting the Chileno to lend money to the government?
I would say that the solution in this case, and to attract the corporate sector, that finally is the most important for the decarbonization strategy, is how to engage with other, for example, jurisdictions in order to equate the treatment of the different securities, not only bonds, because sometimes in the case of the corporate sector especially, the bond is not specifically the most useful instrument. So in this case, sometimes Trump's action could be an opportunity, because sometimes Europe could need certain allies in this regard. And we are in a process of equalize or harmonize for example, the taxonomy, the green taxonomy of the European Union, with our taxonomy, which is not still enforced, but under the process of development. So there are a lot of different efforts that could help to that, but sometimes we equate the green sector and the financial green sector with bond, and this is not always the case.
Thank you. Yes. Oh, please, Herman. Yes, do. And I know Gordon wants to join in as well on that. So, Herman, yes, you first.
Okay, Gordon, please go ahead.
No, look, I would just, getting back to the question with Greg, I would make the observation, it is true that ESG issuance has been subdued in the US for a variety of reasons. A lot of it political, I think, and a perception that corporates in particular are sort of shifting their approach. I think others have sort of put a stake in the ground and said we will continue this. But if we look at Latin America, there are major issuers on this call and others who are committed to regular and ongoing ESG issuance, but more than that, as Victor says, to the policies that sit behind them. If we look at total issuance last year from Latin America, almost 30% of issuance was in ESG labeled format. So I wouldn't say that the Latin America, you could say Latin America might be swimming against the tide, but the tide hasn't turned such that ESG issuance does not make sense. And that's a mix of sovereigns. A lot of that is sovereigns, including the sovereigns on this call. corporates and financial institutions that have regular ESG issuance programs. So, last year in the U.S., I think the statistic was down to 2 or 3%. So I think Latin America is actually a leader in ESG issuance, and I think we'll continue to see that.
Sure, that's right. And Armand, please say.
Maybe as a segue, just 2 points, and again, I agree with Greg that during this period we've seen politically driven, mostly coming from the US and ESG backlash, and we typically focus on the commitment, on the regularity, on the ongoing issuance. But it's also very important that a co-benefit of this kind of instrument is that you get commitment, regularity, and ongoing reporting of ESG information. So in other words, you may have sovereigns or corporates that are not actually issuing ESG instruments, but they have created a commitment to regularly report on those indicators. And that's very valuable information to investors to the extent that they internalize it as factoring in the creditworthiness of the countries. So I think it's important to emphasize that commitment too. And my second point is when we issued it in 2022, our SLB, and by the way, CACIB played a key role, and in particular, Gordon, who's here in the call, we included a biodiversity indicator for the first time in the protection of native forests. What we didn't realize at the time was that 2 or 3 years later, the European Union would launch a regulation whereby they will require countries that want to export goods, primary goods to the European Union to show that their goods are deforestation-free. So in other words, what I'm trying to make the point here is as a sovereign issuer, one has to also take into account the broader picture on what other areas of policy making may be impacted by your ESG initiatives. And in this case, the fact that we gave much more visibility to the commitment to no deforestation in Uruguay. We put resources into the cartographies to measure native forest area, actually had co-benefits in terms of trade policy for Uruguay. And I think that kind of connection is important as sovereign managers to keep in mind. In fact, we've been recently contacted by 2 African countries that are looking into a potential SLB issuance, where in both cases, or at least I would say for sure in one case, the focus is on preventing deforestation as a KPI. And that's because mostly from European investors, they are very, very concerned about biodiversity around forest protection.
I mean, you and Victor obviously famously are the pioneers in sovereign SLBs, but I'm happy to report to you. It's not a secret, but my good friend who runs the DMO in Slovenia is about to join the club. So there will be the first non-Latin American SLB issue. Luis, let me turn to you. You haven't spoken for a while. Of course, Brazil did your inaugural sustainable bond issue last year. And indeed, our dear friends over at Global Capital named it as the Latin American ESG Deal of the Year. What's your view on the current state of the market investor appetite, commitment by Tesoro to labeled bonds? What direction are you guys heading in?
Yeah, Brazil is quite new in this market. We made our first issuance was in November 2023, and in June last year we did the second issuance. Our framework was launched in September 2023. In both issuances, we saw a big interest by the investors. We observed the demand for the bond far higher than the amount issued. On average, 3 times the demand regarding the amount of the bond. So it was a very good reception for the bond, especially because this issuance is part of a broader agenda of the country. In terms of commitment, this bond is part of the ecological transformation plan that the government has launched also in 2023. It's a big plan. in terms of sustainable finance, bioeconomy, and so on. Last year, we have introduced our first allocation and impact report that was also well received. We have some good feedbacks on investors in terms of how complete is our allocation and impact report. Our major indicators are all of them associated with the multi-annual plan of the government in terms of budget. So we have a quite diverse indicators in the allocation and impact report. So this whole construction that we did in terms of governance, we created a committee which is integrated by 10 ministries in Brazil. So governance, transparency, and regularity, the idea of issue at least once a year, one sustainable bond. All this set of the arrangement is important for the investors in order to buy our bonds. So our focus is also, as in the other part of the external strategy, our focus is qualitative issuances in order to make good benchmarks in the value of our yield curve to foster corporate issuances. So this whole strategy has been well received by the investors, and we see that in the demand for the bonds, and also the good performance of the yields of those bonds after the issuances.
Thanks, Luis. So, Greg, you started this. What do you think of what you heard?
I'm just going to go back to the local markets issue as well, stepping away from the ESG for a moment. But I think some of the many of the issuers have been very successful in their domestic capital markets. I think you mentioned Colombia earlier. The first social bonds that Colombia issued under its framework were actually issued domestically. Brazil has had tremendous success in its domestic capital markets, including bringing in non-Brazilian investors to its domestic capital markets, and that's also shows that the framework that Brazil is using. So it's the local issues are still there, and actually an increasingly active part, I think, of a lot of the debt managers, to the extent that the domestic savings and the modalities are in place to permit it. But I agree very much with Herman in the sense that it's more of a U.S. domestic issue. I think in the sense that European investors, I think Herman mentioned, still have a different appetite maybe than U.S. investors. Manuel mentioned that CAF has moved a lot of its funding more towards the London market in terms of coverage as opposed to the U.S. I think it really is a backlash that is going to continue for some time. President Trump took office in January. He's got a 4-year term. The House of Representatives and the Senate will be controlled by the Republican Party at least for the next 2 years. So I think it'll be a very active 2 years in a continuation, at least in the US, of the backlash against ESG, whether it is very much, whether it's smoke or fire and how effective they can be in that, time will tell. But I think at least for the next 2 years on the US side, you'll continue to see that backlash.
Okay.
If I could, Chris, I would just interject one point on that, Greg. I agree that from a policy point of view and from the approach of a lot of the players in the market, ESG will be de-emphasized or they'll be turned against it. Does not mean that U.S. investors will not be buying ESG bonds. And I think it's a very important distinction. And if you look at almost 30% of the deals that were done last year in Latin America were ESG labeled. It wasn't the case that 90% were placed in euros. It's, the typical spread of probably 80% of that was in dollars. So that means there are dollar buyers in the U.S. and in Europe as well. So I wouldn't write them out of the equation at all this year. But on the, let's say, the borrowing, issuing, and policy side in the U.S., I think people are going to be keeping a low profile.
Yeah, I think also on the policy side, again, starting with the states, but also the federal government, there have been rule changes in place which make it sometimes more difficult for U.S. institutional investors to invest in ESG bonds. So, for example, under the Biden administration, the Labor Department changed the rule for fiduciaries and what fiduciaries could consider when making investments. And it was to whether it had to be purely an economic decision or whether they can consider ESG factors in making. So that's a rule that's been in flux back and forth. It was adopted. It's been in litigation, what have you. There are also a lot of the states, different states we would call red states in the United States, where there have been laws put in place in a number of states which do not permit different state-controlled investments, whether that's from state universities, state pensions, what have you, from making these sorts of investments or using ESG as an investment criteria for making the investment. So there is. I'm not saying that U.S. investors won't buy into ESG, let's say sustainable bonds, but there has been a regulatory de-emphasis to some extent at the federal level, but also in various state levels that make it for some pockets of money more difficult to justify ESG investments.
Okay, sorry, there's a screen over there on which one or two people are making comments, including one that Gordon's just made. But the type, it's like reading a newspaper that's 10 feet away. So, yes, plenty of demand. Well, you've already said that, Gordon, so that's fine. So, Manuel, would you like to answer a geopolitical question? I'm sure you would.
I'll try my best.
Well, I mean, obviously, everything that we've been talking about and everybody's been talking about is all, you could sort of boil it down to geopolitical realignments of one sort or another. And of course, America is by no means the only actor in this drama. The China and others, South Africa, to take one example, these are not passive sort of recipients of President Trump's what's the right word, ideas. But do you think, as you look at the whole region, I mean, basically the whole of the hemisphere, ex the US, do you think that there could be, following on from these sort of political realignments or attempted political realignment, there might also be for Latin America some commercial realignment? Might you see, for example, that people want to make sure that El Gringo is happier and therefore potentially de-emphasize exports to China? I mean, is this complete nonsense, or is there a chance that there would be some economic commercial realignment to go along with the geopolitical?
I mean, and this is my personal opinion, for that to happen, there has to be a specific demand to replace what could potentially be losing Chinese investments. So if there's a pickup from other countries, including the US, in specific big infrastructure projects, I know you saw a couple of months ago in Peru, for example, the big port that was inaugurated with Chinese investment. I mean, my understanding is that that occurred, that was shown to various U.S. institutional investors, and unfortunately there wasn't demand, and that's where the Chinese came in and replaced that demand. So it's all good to say countries will try to realign, but if there isn't a replacement of that vacuum in terms of demand, then I don't see that happening.
I mean, it is true to say, and this is not a recent phenomenon by any means, that the US, if the US, for political, commercial, economic reasons, wants to keep China out of Latin America, then they need to step up themselves and start building things. And, obviously they do, but, that needs to be increased.
Correct.
So we'll see. Tomás, whilst we talk about geopolitical realignments, one outstanding fact about your institution, as many people know, is that your first non-Latin American shareholder was and remains Taiwan.
That is correct.
And yet many of your member countries, including your home country, if you like, Honduras, have stepped away from recognizing Republic of China as opposed to PRC. That seems to me to fall into the general category of geopolitical realignment. So how do you see the same question from your personal point of view or from the banks? I'm not sure which country you're a citizen of. Are you hondureño?
Mexican.
Mexican, okay. But how do you see this question? Does it have any impact at all in Latin America, first of all?
Not in principle. I would say one of the reasons that Taiwan is part of the bank is exactly right. Is geopolitical. It's not really commercial interest as opposed to Korea, for instance. Korea is part of the bank because of commercial reasons. In the case of Taiwan, is more political. So having said that, what I'm thinking is, and it's a personal view as well, is that they will remain in the bank exactly because they want to keep presence in the region. And on the other hand, the United States will support Taiwan in the region as well, because the United States already has presence in Latin America through the IADB, so they don't need to go to other MDB to have presence in the region. So what I'm thinking is that they will try to have friends like Taiwan in the region. So the United States might try to push Taiwan to keep its presence in Quebec. So I would say so the status quo will remain, will prevail as it is right now.
That's interesting. So you view Taiwan almost as a kind of proxy for the US in but
so to speak.
Am I right in thinking that of your member countries, only Guatemala still recognizes China ROC?
Yeah, and Belize.
I thought so. Before we move on to another topic, which might come to be our final topic, which we touched on earlier, several people have, which is domestic markets and local currency markets, both domestic and international. Greg, Gordon, do you have, or Herman indeed, do you have any comments or thoughts on the matter we've just been discussing of the potential for economic realignment to follow on from political realignment, if indeed political realignment happens, but certainly there's a drive for it?
Maybe I'll start.
Yeah, please do, Greg.
Go back to Nick's original comment, right? Whether in terms of U.S. politics, whether President Trump's if it's the short-term or long-term impact. I think we've had some. I think if you look at media reactions to the past week or so of U.S. foreign policy decisions, I think that's going to take a while for the markets to sort out, and whether that is a negotiating strategy or whether that is a longer-term policy, and whether that goes through the Trump administration and subsequent U.S. administrations. I think that's a much longer conversation. It's a much longer view needed to discuss that. So it's save this page. I think it'll be another interesting thing to see. But it's a question again as to whether it's a short-term negotiating strategy versus a long-term realignment that we might be saying.
Yeah, I mean, you all obviously in the written questions I sent to all of you, by no means all of which we have or will answer. I said, is the world really turning on its head, or is it just another set of problems to be managed by smart people? You all obviously fall into that group of smart people. Gordon, commercial realignment?
I think it's a tricky balance, to be honest, because I think that there's a great opportunity for the U.S. I mean, if I speak very broadly, the U.S. has always been present in Latin America, but probably hasn't paid so much attention in the last 20 or 30 years. That has left an opening for, commercially attractive approaches from countries like China. I think China in particular, which has taken a strategic approach. I think this could be a moment where there is a realignment and the U.S. becomes much more.
Oh, have we frozen? I think Gordon have.
We lost Gordon.
Yeah.
Is everybody else still with us?
Yes.
Okay, good. We lost Gordon. We lost you there.
There he is.
Like he's having connectivity issues.
He was just in the middle of saying something rather interesting as well. So, come in, New York. says you're connecting to audio, Gordon, but are you there now? Hello, Gordon.
Hi, do you hear me now?
Yeah, yes. Is this French technology we're working on here,
Better
Gordon?
be careful what I say. I had a little blank out of the internet there. No, look, I think that there's potential for that, but I think if the U.S. on the other hand pulls back from supporting some of these countries in a broader sense, that could leave room for China or for other players to come in. So I think it's still to be seen. I think for me, it's a little early to predict.
I mean, I think you're right to talk about a 20, 30-year horizon, but I think it is bloody important that the US should re-engage with Latin America. My own personal view. I don't suppose that's terribly controversial. Manuel, let's talk about local currencies. We touched on it. Several people have touched on it already. As well, of course, as issuing in, perhaps unusual, issuing in sterling or Aussie dollars. You have, I think, also issued in member countries' currencies, haven't you?
Correct.
And part of the motive for that is usually helping a local capital market to develop, and indeed a local savings culture and asset management industry and so on. So what is your view of the current state of play in that type of activity?
I mean, for an MDB, it's always difficult. It's not as easy to issue in local markets, because when you issue in a local market, it's the sovereign that's the risk-free. And even if the MDB has a better rating than the sovereign itself in international markets, it's very unlikely that you'll be able to issue below the sovereign. There are some cases, but at the same time, for us, it's, as you mentioned, very important as a mandate to help develop local markets by doing type of structures that not necessarily corporates would do. So going more long-term, or even structures that are not conventional for those local markets. So last year, for example, we issued in Costa Rica, we've issued in Paraguay, in Jamaican dollars. That case was offshore, but we've also issued in Uruguay in unidades indexadas. And in those cases, what we try to do is find projects that we want to finance in local currency and try to do a match back-to-back of those issuances in order to offload in local currency. But that usually happens in projects that we want to finance in the private sector. Because as I mentioned before, in the sovereign, if we issue that way and then we add our margin, it doesn't make sense for the sovereign to receive loans in local currency if they can just issue at lower rates. So it's not easy, but at the same time, it's in our mandate, and that's always something that we're trying to push more.
Okay, you just mentioned the private sector, and I'm curious just for a second. CAF does not, as far as I know, yet have the kind of equivalent of IFC or IDB Invest specifically mandated for private sector. Is that correct?
So we, in our loan portfolio, I would say before the pandemic, the average private sector participation was between 15 to 20%. But during the pandemic, there was a crowding out effect. So more governments needed more funding. And that led to the private sector to reduce to about 10%. However, we just got about 2 years ago a new capital increase of about 7 billion from our shareholder countries. And one of the objectives with this capital increase of 7 billion is that a certain amount of that capital increase is to go towards private sector. So in the coming years, you will see that 10% go up to 15 to 20%.
Okay, good. Thank you. Victor and Herman, we mentioned, I mean, the deal that caught my eye last year was the global Paraguayan Guarani bond, which was a great success and was designed and mandated directly from the president down. The Dominican Republic just issued in global pesos this week, a small amount, but would either of you consider doing that kind of thing yourselves to issue in Chilean pesos or in a global context, or Uruguayan? Who wants to go first? Herman, your microphone's on, so why don't you go first?
Well, back in May last year, we launched a dual tranche global offering of a new CPI indexed bond in local currency, longer term, but also we reopened our nominal peso fixed rate global bond, which was shorter term. So this was the first time that the government was executing what we call the dual tranche, dual format local currency in global markets. Whenever we had done a dual tranche in global markets, it typically featured the local currency component and a dollar component that acts as a hedge in case the local currency component doesn't go as well. But this was the first time we were going with both local currencies at the same time. But what was new about that transaction was not only that dual component in local currency, but for the first time, we were allowing investors in global markets to buy our global bonds from the Treasury by tendering central bank bills, short-term central bank bills. In other words, we were connecting our sovereign financing with a financial mechanism that allowed investors to exchange with central bank bills. And that actually, that coordination between the central bank and the Treasury actually was very important for us because it provided investors with greater financial flexibility, and it also enhanced the demand for our bonds, so helping us get better funding conditions for the government. So we shouldn't forget that both the central bank and the Treasury are both part of the same sovereign curve. It's typically the central banks issues shorter maturities because they do monetary policy fine-tuning. We typically issue in medium term and longer term maturities. But we found this mechanism whereby we took like a sovereign asset and liability management, and whichever central bank bills we got as tender, then we sold it to the central bank at market prices, obviously. So for us, it was a very good experience, a transformative one, because it helped us increase the size of our local currency funding and at the same time have this new financial mechanism.
And are you exploring the possibilities of just going back to that OECD report, are you exploring the possibilities of expanding retail govies in Uruguay?
Well, we do have retail demand in our global transactions. Typically, it's only a smaller share of our total demand, and that's because retailers are not as used as participating in a global transaction that is intraday and only happens for 3 or 4 hours. So it's always a challenge to have a demand. We know, for example, that Brazil has done a lot of work on incorporating more retail demand into their transaction, but that's something that is currently not in our priority list.
Okay, thank you. Victor, global Chilean peso?
Chile issued more than 15 years ago, perhaps, a global peso in the external market, but from that moment on, the strategy follows has been a little bit different. The idea right now is to solve the bottlenecks that dissuade the international investors to participate directly in the Chilean market. Actually, during 2024, for example, and from 2020, I think, we have issued through a book building process in Chilean pesos with direct participation of international investors. So we have a typical absorption made by the international investor around 10 to 30%, depending on the year, of the total amount that we normally issue during a year. So the idea right now is to improve the liquidity. There is still a certain gap in comparison with other jurisdictions, for example, Colombia or Peru, that obviously the situation is different, but certainly could be a benchmark. So the total stock in Chile and the participation of the external investors is relatively modest. And the idea is to increase that. So, for example, Chile is one of the few countries that still doesn't have market makers, in the case of the OECD countries, for example. And the idea is to install market makers, or at least to analyze the possibility during this year, to improve the liquidity, the internalization of the peso in the international markets also. So the idea is not to issue in the global market under external jurisdiction, US law typically, but to issue internally, but to facilitate the participation of the international investor in the Chilean market.
Okay, good. Thank you. I'm going to ask people who are not citizens of Latin American countries, i.e. Gordon and Greg, where, if anywhere, do you locate political risk in the region? Because I mean, on an historical basis, it's quite unusual to have been talking for 100 minutes about Latin America without mentioning some sort of political risk. And indeed, as nearly all of you were on the sort of pre-panel call we did last week, when Simon Quijano-Evans, who unfortunately hasn't been able to join us, was quite keen on the whole topic of political risk in the region, and I sort of suggested that there wasn't much and it was all fine, and he pushed back quite strongly. So, as he's not here to speak for himself, Gordon, what's your view or the bank's view on? I mean, we do have some the Colombian election is, they always come around quicker than you think because they only have 4 years. Where do you locate political risk in Latin America?
I look north of the border these days for political risk, and,
well, you
and
mean
by
Canada?
that, yeah, no, by that I don't mean political risk, but let's call it policy risk, because I think what we've been talking about with this new administration is, a lot of shifting of trying to break some paradigms. Question remains: does all of this stuff get implemented? Is it blustering and so on? But I think that kind of uncertainty and volatility actually does throw some volatility into the markets. And if you look at Latin American spreads, and getting back to this point, if you look at Latin American spreads in U.S. Treasuries, the volatility lies in Treasuries, not in Latin American spreads. We haven't seen that volatility since really the pandemic, and some of the aftermath of that. So I think the market is taking what we have historically called political risk, more leftist governments, shifts in policy, more intervention, pretty much in stride, to be honest. And I think you look at Colombia is certainly suffering from a lot of political volatility. Curiously enough, the peso has been rallying, so you could say that there's so much liquidity that it's going to rally anyway. You could say the cynics would say, well, the chances that Petro could leave in the next election have gone up, so therefore people are taking a longer-term bet on Colombia. But I think we look a lot less in the region for that kind of political risk having dramatic effects on volatility. Strangely enough,
if you wind the clock back, I don't know, 3 or 4 years, perhaps 5 years, there was a sort of, people were very jittery about the rise of, broadly speaking, leftist politics in the governments of the region. Chile was certainly one example of that, and Colombia, as you say, perhaps the most notable, where people were terrified of Petro. Brazil, of course, was another. That was a sort of quite a large pendulum swing there. And of course, Peru hasn't had a government worthy of the name for about 5 or 6 years. And yet, as you say, everything seems to go along pretty smoothly. What do you think of that, Greg? Is it a sort of degree of maturity? Have people lost their fear of radical politics of one kind and another in the region?
I prefer to leave those discussions to the bankers and the sovereigns themselves, but I have at least the impression that there has been a maturity of the market in terms of swings not being as concerning as they may have been in the past. I think you have a number of leaders from wherever they fit in the political spectrum have shown a dedication to repayment of their bonds. And so I think some of the fears that we may have had even 20 years ago and back, as different politicians have come, different leaders have come into different countries, whether they're from the political left or from the political right, they've continued to make payments on their bonds. So I think there has been less of a concern. And there's also been, I think, the old word decoupling, right? There's also been a decoupling and a sophistication of investors to be able to discern what is political noise and what is actual political reality, and discern between different countries as well. So I think there has been, there's been a market change over the past decades in less fear of political left and political right. It's everybody continues to pay their bonds, based on payment capacity as opposed to political whims. So I think there's certainly been a maturity in the market in terms of how it looks at different sovereigns.
Good. Thank you. I mean, I suspect our three remaining sovereigns on the panel would not wish to comment on politics in other people's countries, nor indeed in their own. But if anybody does want to say something, Luis, Victor, and Man, please do. I'll give you 5 seconds to decide if you're going to do that. I didn't think you would. Manuel, again, you survey the whole region. I can't remember of which country you are a citizen yourself.
Peruvian.
You're Peruvian. Good.
Yes.
Do you agree with me that Peru hasn't had a government worthy of the name since Pedro Pablo Kuczynski?
I would say it's that there's been a substantial difficulties. We've had numerous presidencies in the last decade, more ministers of finance and economy, which obviously has led to political instability. And in the past, when you would look at Peru, even if you had a leftist government or a right government, the economy would always continue to grow. And I think the last couple of years has shown that that's not the case anymore. Political instability does have an impact, and you just can't assume that everything will work perfectly economy-wise with that instability. Yeah.
And in the upcoming Peruvian election, there are, I believe, the current number is 40 presidential candidates. I mean, last time it was bad enough, and I think there were about 30, which almost guaranteed that nobody was going to get a proper mandate. Anyway, we won't ask you who you're going to vote for. But I see that my dear old friend Hernando de Soto, who is well into his 80s, is standing again.
Oh, wow. Okay.
Good, apparently. Anyway, okay, that's probably enough politics for everybody. So I'd just like, in closing, to have a quick roundup of people's views on kind of where we started, really, the rates environment. I mean, there's an argument to say that the Fed's decisions are the single most important thing in all your lives, you issuers at any rate. And not long ago, you would have thought that the rates, Gordon described them as high. I mean, historically, of course, they're not high, but they're high for people who've only been around for 10 or 20 years, perhaps. But what do you think, Vic? I mean, how, as I put it, whatever happens will be a surprise, Victor. So how do you prepare for that?
Well, I'll say that perhaps the most clear way to present is the difference between 2024 and 2025. In 2024, there was not a clear picture, but at least the probability to an environment with low rates. Right now, the direction is not clear. It could be even higher. So it determines actually the plan. In our case, we have to be cautious about, and normally, and do we announce from 2000 annual plan for auctions. From the past year, we decided to do it quarterly, and we think that to be flexible is the best issue right now. But yes, obviously the tariffs is an issue that determines the path in the future, and there's a lot of questions in this regard. But what is clear that is super lower rates is out of the question right now.
Man, presumably you are not preparing for a lower interest rate environment in the foreseeable future. Do you fear it might go the other way, that the Fed might hike?
No, we are not. And naturally, base interest rates and then credit spreads and eventually any new issue premium are key whenever you have to finance the deficit, no, the fiscal cost of the fiscal deficits. Yet, if you think about it, the biggest chunk of the interest that you pay during the year are not from the issuances of a given year, but it's previous issuances. So most of your interest payments are predetermined in any given year. And that's why it's so important then what happens also to the exchange rate, because a big chunk of what the interest you're paying is in dollars. So that would you have to measure it in the currency in which you collect your revenues. So it's very important also to have an eye put not only on interest rates on new issuance, on your funding of your given year, but also on the interest you're paying because of previous funding or previous fiscal deficits, and particularly the evolution of the exchange rate.
Of course. Luis, rates outlook, are you worried? Are you calm? Are you prepared? How do you prepare for a surprise?
Yes, in fact, in Brazil, 96% of our debt is domestic debt. Of course, the global conditions for rates will impact the domestic rates. And in this process, we may see some volatility in the market. One policy that we have here in Treasury is to maintain a cash buffer, liquidity reserves for debt management. Nowadays, we have something around more than 800 billion reais. That is, let's say, 8% of GDP, 7 to 8% of GDP in cash. That provides us flexibility to manage these moments of higher volatility in the market. In the medium and long term, I believe the cost conditions for that will depend more on the environment, for domestic environment. Especially, we are in a process of fiscal consolidation. Also, the central bank is right now in a tightening cycle of the monetary policy, and in the short term, we have this higher cost for the debt. But there is something that we can manage. We can diversify our debt composition. This is also an important point in our strategy. Domestically, we may issue floating rate debt, nominal bonds, and also linkers, and we can adjust the share of each of these bonds in our issuances, also in response to the market conditions. So the major strategy here is to keep this cash buffer and also diversification of our bonds in the strategy. Also, we have this strategy to keep our debt in the domestic market. That is a deep market. We have a diversified investor base too in the domestic, and about 10% of our debt is held by non-residents, mainly foreign investors, beyond the external debt. So the diversification here is the key word for describe our strategy.
Okay, thank you. Well, yes, diversification and liquidity are two holy grails that we often find ourselves talking about. Just finally, Gordon, Mr. Powell is clearly coming under a degree of political pressure. Will he survive? I ask you as a US citizen, perhaps.
Yeah, good question. I guess very much my personal feeling, I suspect he may. I think the fact is the focus on rates has shifted from the Fed, which is not going to be doing too much this year, to the fiscal side. So I think rates are going to move with what happens in the government, not with the central bank. So in a certain way, he will become less important and maybe out of the sights of this administration. But I don't have a deep Washington insider's view on that by any means.
Okay. Well, final word therefore to somebody who is at least physically in Washington. Greg, what do you think? Same question. I mean, is the, we've become so used to the idea that central bank independence from executive control is a very good thing, with capital letters. And I don't suppose many theorists would argue to the contrary, but it's not exactly being emphasized currently in the city you live in. So will Mr. Powell survive? What is the outlook for US rates and monetary policy generally?
Harder for me to say about US rates. I think the one sovereign issuer that in the region that we have not discussed is the US, with our 35 trillion or so in outstanding obligations. And I think some of the pressure that we're seeing, both President Trump's pressure on Jay Powell, to the extent that there is, and I think in my view from basically statements that Jay Powell has made when President Trump was elected, that he will not leave office, which was a fairly strong statement and a very curt statement made by Jay Powell when he was asked. But I think a lot of the pressure that we're seeing internationally, if we can see this in a positive note, maybe, and maybe these are rose-colored glasses, but this may be the beginning of the US government's realization that we ourselves are not on a sustainable path with our own indebtedness. And to the extent that you're seeing Elon Musk in different agencies cutting around the edges, to the extent that you're seeing, Vice President Vance's discussion recently in Europe, to the extent that I think President Trump recently announced that he's considering cuts in our defense spending. If I can leave maybe this conversation in a bit of a hopeful note, maybe the US is beginning to take seriously our own fiscal problems. And if we were to do that, I think rates will take care of themselves.
That would certainly be something revolutionary and a very interesting and, as you say, potentially optimistic point on which to close. So I'd like to thank you, all those that you remain, Luis Fernando, Tomas, Manuel, Victor, Herman, Greg, and Gordon. Thank you all very much for taking part. And of course, those who had to leave us earlier on. It's been I think, pretty interesting discussion. And I hope all of you out there watching and listening have enjoyed it as well. Do let us know what you think. And I guess the next big thing in many of your calendars, particularly yours, Victor, is hosting the IDB meetings next month. So good luck with that. I think the last time was 2000, if I remember rightly. So a whole generation has passed by since then. I'm sure most, if not all of you, will be there. Thank you very much indeed. If we were live, I'd ask the audience to applaud, but we can't do that. So we'll just say goodbye to everybody and thank you very much indeed. Until the next time.